What's up everyone, welcome to Stockton. It's a pleasure to meet all of you. On this channel, we talk about stocks before they start blowing up, say goodbye to chasing stocks at all-time highs, and say hello to making some money. So if this sounds like something you want to take advantage of, then hit that beautiful subscribe button and like the video. Now let's get to it. Before we get into the video, I have to say that I'm not a financial advisor. Anything I say is just my opinion and is for entertainment purposes only. Having said that, if I'm talking about a company, I'll let you know whether I'm personally going to invest in it or not towards the end of the video. But you should always do your own due diligence, so with that out of the way, let's get started. So today, we're talking about Bionano, ticker symbol BNGO. This company operates in the gene sequencing space. The company develops and markets the Saphyr system, a platform for ultra-sensitive and ultra-specific structural variation detection that enables researchers and clinicians to accelerate the search for new diagnostics and therapeutic targets, and to streamline the study of changes in chromosomes. In essence, Bionano provides scientists with the tools they need to map our DNA and to find any variants in our genome that might cause genetic diseases or cancers down the line. Now, I'm not a scientist and I don't claim to understand all of the intricacies involved in gene sequencing, so this stock is definitely a speculative play for me. I usually stay away from speculative plays, but the upside potential to this one is too big not to consider. Right, so Bionano is currently trading at 77 cents. It's had a 40% pop due to a positive catalyst that we'll discuss later. But right now I want to show you the chart of a direct competitor for Bionano. This is Pacific Biosciences. Pacific Biosciences, as you can see, is at least 50 times bigger than Bionano, so there's a lot of room for Bionano to grow potentially. This just gives you an idea of how high this stock can really go in the long term. It's also important to be aware of the fact that Pacific Biosciences was founded in 2005, whereas Bionano was founded in 2018. So as this is the very early stages of its growth, it looks like a really good ground floor opportunity for investors. But at the same time, since it's such a young company, the risks are also there. Personally, I like this kind of risk to reward ratio. Next, I want to show you the press release that was the catalyst behind the 40% pop in the share price. So here it is. Publication reveals in side-by-side comparison that method using PacBio sequencing detects only 72% of the large structural variants detected by optical genome mapping with Saphyr. So what they're saying is basically that their system or their product is better than Pacific Biosciences in terms of finding all the structural variants, and how Pacific Biosciences only detects 72% of large structural variants, whereas their product does a much better job. So if this is true, this could be huge. You can read through the complete press release yourself by going to their website. Now let's see what analysts are saying about this company and whether this has more room to run according to them. Jason McCarthy is apparently a 5-star analyst, and this is what he's had to say about BNGO. First, just to give you a bit of context, this analyst made these remarks off the back of a study where Bionano showed its effectiveness in identifying structural variants with a more efficient workflow using its Saphyr product. So this is what he had to say. Considering that the aberrations required a combination of all three methods to complete, Saphyr being able to match the results in 100% of cases with a simplified, automated workflow further highlights Saphyr as a disruptive technology in the cytogenetic space. McCarthy argues Saphyr could be a game changer in the emerging digital cytogenetic space. Labor-intensive methods are normally required by cytogenetic labs in order to detect and diagnose structural variants-driven diseases. Additionally, these working practices have notable limitations and require a combination of methods to provide a comprehensive characterization. Saphyr, says McCarthy, could potentially replace these techniques with a simplified and rapid automated workflow that provides comprehensive detection regardless of the type of variation. Saphyr's workflow is much quicker, running 42 samples in a week. As such, the Saphyr approach could set the stage to integrate into the cytogenetics labs. To this end, McCarthy rates BNGO a buy along with a $2 price target. Right, so I talked about the risk to reward ratio earlier, and I feel like I should warn you about the risks as well so you can make an informed decision. So first off, the debt to equity ratio is really high. This is a red flag. Also, the cash runway isn't that great. BNGO has less than a year of cash runway based on its current free cash flow. And just in case you're not aware of what cash runway means, this is basically how much longer a company can operate for until it runs out of money. This is obviously assuming that they're unable to raise money, which they could do in the form of shareholder dilution and by offerings in the future. So having less than a year of cash runway is again a red flag to be aware of. In the long run, if they're able to survive, then sky is the limit for the stock. And there's also the possibility that they get acquired by a bigger company in the genomic space like Pacific Biosciences or by Illumina. Just a bit of backstory. Illumina tried to buy Pacific Biosciences last year, but the deal fell through and Illumina had to pay Pacific Biosciences a hefty sum in fees as penalty for not following through with the acquisition. So my point is that an acquisition is certainly on the cards, and if that happens, the share price could shoot up. Now I want to quickly talk about why investing in a cheap genomic stock can make you a millionaire potentially. Obviously, you could also lose your investment, especially if you're investing in a penny stock with shaky balance sheet. But everyone's appetite for risk is different, so that's a decision you'll need to make for yourself. Right, so the reason why I think investing in Bionano could end up being very lucrative is because of the total addressable market, which according to Cathy Wood from ARK Invest is so huge that she thinks genomic companies will replace FAANG companies in the years ahead. In her most recent interview, Cathy Wood was asked to name a stock or sector that she thinks can do as well as Tesla did, and she says that it must be in the genomic sector. She also mentioned that she reduced how much she invested in the FAANG stocks ever since they crossed the $1 trillion valuation, and thinks that the genomic revolution will form the next generation of FAANG stocks, as opposed to the internet revolution of the past. Right, so my strategy for this stock is very simple. I'm going to start off with a very small position and add on the dips. This is going to be a very small part of my portfolio, but the upside could be massive. Anyways, that's it for today, guys. Let me know what you think about the stock. Are you going to buy it or is it too risky for you? Leave a comment below. Let me know what you think. As always, if you enjoyed the video, then please give it a thumbs up. Subscribe to the channel. It really helps with the YouTube algorithm. Have a great day, and I'll see you in the next one.